You are speaking.
Hello, can you hear me?
Yeah, yes, sir.
Yeah. The net debt as on, out of which 217 crores are soft and interest-free debt. The average interest rate on borrowings have softened by 84 basis points during the year. The net debt to EBITDA is 1.89 times as on 31/3/2021, as against 2.52 times in the previous year. So this is what I have to say for the opening remarks. Thank you. And over to you for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Hi, good evening. So on the cost side, so while you mentioned that you have seen the mix of fuel to lower petcoke now, I just wanted to understand, even the coal costs have gone up. So could you provide any guidance on the near-term cost escalation on power and fuel?
See, what we have done, good evening, I'm Dharma Krishnan, CEO of the company. See, what we have done, we also were able to procure coal at much cheaper rates. We have stock for next 2-3 months. Also, we have alternate fuel like lignite, which we are able to source from nearby Neyveli Lignite Corporation. So, to that extent, we are isolated from the huge cost increase of petcoke. So, next 3-4 months, definitely we can manage. By the time we are confident that if the coal prices soften, then we will increase our stock.
Okay. And in terms of the clinker, the 2 clinker lines, so could you also specify what percentage of completion rates have been achieved at both Jayantipuram and Kurnool? I mean, just wanted to understand, can the labor issues further delay the commissioning, or are we fairly confident now of June and September commissioning as guided?
No, as far as Jayantipuram is concerned, in fact, we are glad to inform you today we have commissioned our raw mill. So there is one important stage today. We have successfully commissioned raw mill without any teething problem. It is running. We are 100% confident we will complete the project by June 15th. But to that extent, up to clinker we will only clinker. Just clinker is pending. So definitely we will commission our clinkerization by June 15th, and we are 100% confident. As far as the Kurnool is concerned, okay, there is a little bit manpower problem is there. What we will be doing once we commission our Jayantipuram plant, we will shift our people there. They are also fairly we are confident whatever revised state given by our chairman will be met out.
Okay, sure. And also about the market generally, because of this lockdown, effect of lockdowns, we are seeing a sharp drop in the market volumes in this quarter. So now that you are targeting to commission both Jayantipuram and Kurnool, how do you think that the ramp-up can be in this situation? Can we expect a longer time for the ramp-up to happen, or would you aim for a faster ramp-up?
We are confident because of our approach of right cement for right application. We are confident about marketing our cement. To be frank with you, April we had done very well. And in the month of last quarter, in fact, we had done 120% of our cement capacity. Normally, with our capacity, we'll be able to sell only 3 million tons, whereas we have done 3.2 million tons. In the month of March, we have done almost 12 lakh tons, which is one of record. In the month of April, we have to take some maintenance of the equipment, so we have done almost 90% of the capacity we have done in the month of April. Till May 10th, we are doing exceedingly well. Afterwards, since lockdown was imposed in different this one we are making around 65% of the capacity utilization we are running now. And the signs are whenever the lockdown is little lifted, immediately we are able to ramp up our capacity. So once the lockdown is lifted, we are 100% confident we'll be able to use our capacities.
Okay, sure. That's all. I'll come back in the queue. Thanks.
Thank you. The next question is from the line of Girish Chaudhary from Spark Capital Advisors. Please go ahead.
Hi, good evening, and thanks for taking my question. A couple of questions. Firstly, from a capital allocation point of view on growth, now that this phase of CapEx is almost done or nearing completion and the gross debt of 3,100 odd crores, are we going to see a pause and consolidate, repay some part of debt, which is a model you have followed in the past, or this time are you willing to continue to explore options for the growth? So on this, this is the first question.
No, we keep our options open. We don't want to commit anything now. We keep our options open. If there are opportunities for growth in certain factories, so we are exploring the expansion also. But we don't want to commit anything at this point of time. At the appropriate time, we will inform the market.
Okay, and then if at all, if you can just guide us on the regions which the next leg of capex can come in.
We keep the options open.
Yeah, we told you, we keep our options open. At the appropriate time, we keep the market informed.
Okay. And secondly, on the volume performance, just wanted to understand this little better. For the quarter, there was a 9-10% growth, and then for the year it was down 11%. So how would have the markets under Ramco's area of operations performed? Was it in line or better? Because considering we also had 3 new grinding units commissioned over the last year or so.
So you know very well what is our capacity. Our capacity is 1 million tons. With our clinker capacity, we can produce 1 million tons per annum. Last quarter we had done 3.2 million tons. Means we have done more than 100% capacity. Means whatever clinker available to last ton we have used it. It's not subdued. It's not subdued quarter. Ramco has done the best in the industry. That parts should understand. It's not subdued quarter. Again, I'm repeating. It's not subdued quarter. Ramco is the only company that achieved more than 100% capacity in any quarter. Number one. Number two, since the clinker capacities are coming up, once the clinker capacity come up, to vast ton of clinker we will capable of selling it at very good price at premium. See, there are certain research firms, they were telling East that Ramco is very weak. There are certain companies that have been projected as very big brand. See, those companies incur losses. You please go through the IPO papers filing. Those companies incur losses, whereas we made very good profit. See, people should also understand what is happening in the market. By sitting in ivory tower, they can't write anything.
Got it, sir. Thank you, sir.
Thank you. The next question is from the line of Indrajit from CLSA. Please go ahead.
Hi, a few questions from my side. First, we had seen an increase in lead distances this year. Next year, as we progressively commission capacities, could we see a sharp decrease in lead distances, or it is likely to be elevated next year?
So the lead distance is depending upon where from I am sending cement. See, today I am enjoying certain railway benefit like LTTC benefit. So it is more profitable to send cement from a parent plant rather than even grinding units. So there are two options now. I can send clinker to my grinding units, so that if I sell cement from my grinding units to the textile, my lead distance comes down, but raw material prices will go up. Or I can sell cement from Gandhivaram directly, so that I can get a lot of benefits from the railways. So the latter part, since is more beneficial, we are enjoying that. That options, okay, whether to sell from grinding unit or to sell from the parent plant, that every rate wise we will calculate whatever beneficial to the company we are operating. Okay, once the benefit goes, then definitely we use 100% of the capacity from grinding unit. Given otherwise, last quarter, the clinker availability was zero for the grinding units. Because there was huge demand for our product. Since we are operating more than 100%, we are not able to give the full requirements of my grinding unit. Had I given the clinker to my grinding units, my lead distance might have definitely come down.
That's helpful. Did we have any clinker purchases in the last quarter, March quarter?
We done some clinker purchases.
Can we quantify or is it very?
Maybe around 25,000 tons.
Aggregate, it is available in the press release.
Okay. Sorry, I may have missed. And lastly, what could be the CapEx guidance for next year, FY20? Given that
next year, that is why in the opening remarks, I tell you now, we keep our options open. First, our priority is to complete the existing projects. As our chairman told, all our grinding units are complete in all respects. So our WHRS in January has been completed. We are putting all our efforts so that my clinker units will come at any cost before June 15th from our January project. Once that is complete, we are making all our efforts to put Kurnool project at the earliest possible. We are mobilizing our own manpower. Even though we've given the contract to Larsen Toubro, they have their own constraint in bringing the manpower. We are supplementing from our own contractors and with our own manpower. Additionally, we have mobilized 1,000 people to support L&T. So with all these things, first our priority is to complete the existing ongoing projects. Then we have other projects which are in the drawing board. Definitely at the appropriate time, definitely we inform well in advance to market as well as a conference call. We well in advance will inform you people.
Thanks, sir. That's all from my side.
Thank you. The next question is from the line of Chirag Sureka from DSP Mutual Fund. Please go ahead.
Good evening, sir. This is Vivek Ramakrishnan. I'm just going to ask the CapEx question in a different manner. And sorry about that. I know you reserve your rights and you'll tell us later. In terms of debt, the debt levels have gone up, but they are very comfortable in terms of service ratios. So how does the company look at indebtedness going forward? Will it focus on reducing debt levels like it's been low in the past, or how would it look at it?
See, we are all veterans in the industry. We are running the industry for the last 50, 60 years. We know ups and downs in the industry. We will keep both in because the growth is also important. At the same time, we should not be over-leveraged, being a commodity in cycle. So we will take very balanced view. So definitely, we are more concerned with the debt. At the same time, more concerned about our growth prospects also. Wherever, so there is we are always look at more than ROC and all these things. We look at payback. Wherever the payback is less than 2 to 3 years, definitely we take up the project. Even the debt goes up by 300, 400 crores. That's not a big matter. The payback will be fast.
Okay, sir. Thanks, sir. That was my only question. Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
First question is on the variable cost. So is it possible to share in the coming quarters how do we see our variable costs in terms of slag, fly ash, and even coal costs increasing over the next 1 to 2 quarters based on recent trends?
The variable cost will be flat. Because there may be some reduction in power cost because we commissioned our WHRS 100%. In the last quarter, we commissioned partially. Now, the 18 megawatt WHRS 100% commissioned in our January plant. In Tamil Nadu plants also, we are implementing WHRS in different forms. So to that extent, there will be some reduction in the power cost. But definitely because of fuel cost increase, there will be some impact. But overall, it will be flat.
Okay. And in terms of the petcoke percentage, we've reduced quite impressively and switched to alternate fuels. Is it fair to understand that this is the lowest, and we will continue at 20-25%, or we can also go to 0%? And does the economics favor that?
No. We will not go 0% because we continue to buy from some committed sources. Otherwise, those sources will go away. Today, the petcoke price may be high, but tomorrow, at the same time, we should understand last year, same source we buy at $45 from 2 lakh tons. So we should not forget that. So because they've gone up now, we can't stop using petcoke. Like we continue to use around 20-25%. I mean, we will try to source alternate fuels much cheaper way so that whatever petcoke cost increase is mitigated.
Understand. So, next question is slightly from a longer term perspective. Just wanted to understand what is the visibility of mining reserves we have outside of AP and Tamil Nadu, our core region. I mean, do we have reserves in any other state? Maybe from a 5 to 10 years perspective.
No, we don't have. We have mining reserves only in Tamil Nadu and Andhra Pradesh. We don't have mining reserves anywhere else.
Okay, and just a last question on the South market. I mean, it's been quite a underperforming market in FY21. So, I mean, can you share what is a rough assessment on how was the overall demand in 21? What was the decline, and how do you see 22 maybe from second half? Do you see a sharp pent-up demand recovery from the second half of this year?
You can't say South market is underperformed. The price-wise, the South market has performed exceedingly well. So it is the one market which consistently given the good margin. So we can't say my South market is underperformed overall. Maybe underperformed to some extent in the volume, but the volumes have picked up very nicely in the fourth quarter. In fact, then I told you, fourth quarter we operated 100%. In third quarter also, because we had extended monsoon. Never in the history, in the month of February, there was rain in Tamil Nadu and Andhra Pradesh and even Odisha. So only the extended monsoon only affected sentiments in the market. Otherwise, the market has performed exceedingly well. And I'm confident that in the current year, only the lockdown, once lockdown is lifted, I'm 100% confident market will bounce back.
Got it. That's very clear. Thanks and all the best, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Ritesh from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, pertaining to the prior question, can you please detail how Ramco's positioning in the eastern market? In South, you know it's one of the strongest brands. But sir, can you provide some more color across positioning, as well as we have launched several different types of cement recently, new brands. If you could provide color on that, that would also be very useful, sir. That's the first question.
My request is you should do your ground check, then only you can understand how strong we are. That is why when I talk to different fund managers and different analysts, people say certain brands they used to sell 70-80% of their cement in premium segment. What percentage of premium segment you are nowhere like the people are telling. But when I saw the result, it's otherwise. So that is why my request is you please do your ground check, your own ground check. Then only you can appreciate what Ramco has done in brand building and also in creating different segment of cement for different applications. So we will claim a lot of things, but my request is you can do your ground check.
Sure, sir. I'll do the needful, sir. Would it be possible for you to classify trade and non-trade for the sales in East versus the sales in South? So that would definitely help us.
As opening remark, our chairman told us around 70-30.
Okay. Even for East?
Yeah, almost maybe 65-35. It varies. Depending upon month to month, it varies.
Okay, that's useful. And so my second question comes on capital allocation. Company has done pretty well on expanding into East. It definitely helps on the volume growth. But sir, internally, what are our benchmarks on IRR or return ratios as we foray into East? Are we confident that it will meet up to the high standard which Ramco has set for its southern plants? That incremental expansion will also yield something similar or better than that?
See, definitely, the East price also now stabilized. So East also we are also making very good profit in the East also. And since our brands are well established, we are confident that East market also make a near-term profit of what we are making in Andhra Pradesh. So we are very confident about it. And as somebody asked, if you are able to reduce the lead distance, definitely our profitability will go up. There is the efforts we are making. And since we didn't have the sufficient clean care, we are not able to make much impact in the market during the last year. That is why our growth was little muted compared to other players, because we made 100% capacity. Now that the capacity has come, we can prove our full capability of our brand building and also our product capability in the used market, and we can make good profit.
Sure, sir. Thank you so much. I'll join back with you for more questions. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yeah, thank you for the opportunity, sir, and congrats on good set of numbers and strong working capital management. Sir, just one question on the part of the capex which is pending, sir. How much capex is left for the ongoing expansion?
Yeah, the present expansion, the capex spending is another 500, 600 crores depending. See, that is why we are also reviewing our whatever the capex, because the three places we have made provision for the expansion also. So all these things are going on. So that is why we'll come with the revised, what are our revised projects, project plans and all these things. We'll come back to you very shortly.
Okay. Great, sir. Thanks a lot. Thanks.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my first question is, pertaining to the eastern operation. As you commission your, clinker plant over the next 3 to 4 months, how should we look at the lead distances for your clinker transfer to east? And, with a 12 to 18 months time frame, is there something that we have on our mind that can, structurally reduce the transportation cost for clinker?
You know very well, we are transporting clinker from Tamil Nadu to Bengal, almost 2,500 tons, are the cheapest possible in the country. See, we have operations of sea, rail, what all the best possible operations we have. We have that options, and we are the only company to operate even the clinker by sea route for 2 years. We started vessels and we done that. We have our own various ways how to transport the cheapest possible rates. And also, to glad to inform you, we are the only company to have railway siding both at the mother plant and all the grinding units. No other cement company can claim they have railway siding in all their plants. Since we have railway sidings in both mother plant as well as in our grinding units, we have various options before us.
Right. So can you indicate what is the current clinker transfer cost which you move from Tamil Nadu to Bengal or
Tamil Nadu we don't move now.
Okay.
We are moving only from Andhra Pradesh.
Yeah. So sorry, sir. Yeah.
We were moving, not now.
Yeah. So what is the cost for Andhra? That you incur on?
No, it is very very cheap. That is one telling. I am very very cheap. I don't want to indicate this one, but we are able to transport much cheaper rates.
Okay. And so secondly, on your WHRS, so after the 39 megawatt that we have in pipeline is done, what is the roadmap to increase that further? Do we have the headroom to grow that, and is there any timeline that you're working for that?
No, whenever further expansion, clinker expansion takes place in Andhra Pradesh, there will be with 100% WHRS. But in Tamil Nadu, we have our own limitations for full WHRS. But partial WHRS already we started implementing in the Tamil Nadu plants. With that, there will not be increase in power generation, but it reduces the power cost. In Andhra Pradesh, we will get the power. Whereas in Tamil Nadu, we don't get the power, but we are able to get the power cost reduction. So there is the different scheme working in Tamil Nadu.
Correct, sir. Thank you so much, sir.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good evening and congrats on the good set of numbers and on the detailed presentation. Sir, could you throw some light on the current quarter? How is it impacted versus expectations at the start of the quarter?
No, our expectations are very high. We were expecting we should use 100% of our capacity. That is why I told you to some other participant also. Definitely April we were doing very well. The prices were good. The dispatches were decent. Till May 10th we were maintaining normal dispatches. Unfortunately, from May 10th, different states started implementing lockdown different ways. Yes. But even today, even till yesterday, we are able to maintain 63% of our dispatches. But balance days, I pray God that the lockdown should be eased.
Right. The situation should come under control. Okay. And in terms of pricing, how are they holding up, sir, versus March quarter?
Prices are good, sir. Prices are much better than March quarter.
Okay, better than March quarter. And lastly, you did indicate that you have some inventories for fuel, which will help you, at the inflationary impact. But could you give some sense on how have the market prices moved up for coal and petcoke that you would be consuming versus your current inventory costing?
So the petcoke today the cost is around $130, whereas our average stock will be varying around $190 to $195. The coal, Mr. Vaidyanathan, you can tell what is the coal average price we have?
So coal prices, coal market prices are now beyond $90. We are not buying since the prices are very high. We have some inventories in pipeline. We have some inventories in stock. So we'll be able to manage this quarter comfortably.
With average price of around $62.
Coal prices will be around $75-80 will be there, sir.
Okay.
Coal prices.
Your average inventory price, you're saying?
Yeah, inventory price.
Okay, great. And sir, lastly, you did indicate on the capex, which is due around 600 crore. So out of which, how much would flow through into FY23, because the grinding unit will
100% everything goes to
100% will be spent in this financial year, FY22, sir, or
yeah. No, everything is trying to be right.
And additional maintenance capex, how much one should factor in for the current financial year?
Around 100 to 150 crores. So that is why I told you. See, we are also planning a lot of things in the drawing board. A lot of projects are there for cost reduction as well as for expanding our capacity. But at the appropriate time, we will keep it.
No. I'm not asking for the incremental. Yes, you will announce. And for the recurring basis, you're saying around 150 crores.
Normally 100 to 150 crores for cost reduction.
Sure. Yeah. Great, sir. All the best, and I'll come back in. Thank you.
Thank you. The next question is from the line of Pritesh Sheth from Edelweiss Wealth. Please go ahead.
Yes, sir. Am I audible?
You're audible, sir.
Yeah. Thanks. So thanks for the opportunity, sir. I was just trying to assess the normalize the cost structure without the impact of the additional clinker purchase you had this quarter, which was over and above what you normally do. So may I know how much was the cost that you incurred on purchasing additional clinker, and also additional freight cost that you had to incur because of that?
No, there was no additional freight cost, but additional cost incurred was around 500 rupees per ton.
500 rupees per ton?
Yeah, compared to our clinker cost.
Okay. Got it. And my second question is on, since now the elections across the Tamil Nadu and Kerala is largely over, and both of the states we have seen a new government getting appointed. So what has been the history? You are since many years. So what is your experience in terms of how generally government works with regards to ordering? Do you see any near-term impact in terms that will get impacted because of a new government coming in?
No, the Kerala is only continuation of the earlier government. There's no new government. The same government has come back. So there's not any change in policy. But in Tamil Nadu, government has come. But the new government always they are in the last regime. They construct number of bridges, and even metro was started in the region. So they are very development-oriented party only. So I'm confident the finance minister is the most educated finance minister in the country today. So under his leadership, the development activities will be a lot more, and Tamil Nadu will march fast.
Great. Okay. And my final one, just on this quarter, what would be your premium mix? Which I think last quarter was around 30%. What would be in this quarter?
10%.
10%.
Because of the so that is why I tell you this. I don't have additional clinker, so I'm not able to push additional volume. Number one. Number two, this premiumness that cement that what we call it as maize division, that requires extensive traveling, mass contact programs so that they can explain, because these are all cements are made tailor-made rather than ready-made. So we requires a lot of personal contact with the end users and educate them why our cement is much better than any other cement, why our cement is cheaper, using cost optimized compared to other cement. So such opportunity is curtailed. I don't say there's no, we are not doing that at all, but the opportunity we are not able to make full-fledged to the capacity of people we have. See, once the normalcy returned, once my people started more traveling, definitely my premium cement share will go up like anything.
Sure. Thanks for that, sir, and all the best.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good evening, sir. Good set of numbers and exciting times ahead. Two questions. One was, what was the lead distance in the quarter and year, if you have shared that number?
Yeah, we have shared it in the press release.
Sorry?
I think we have shared it in the press release.
Okay, not a problem. And what kind of volume growth you are expecting for FY22 and your outlook on the industry volume growth, considering a couple of months?
You know very well today's lockdowns are imposed in different parts of the country in different ways. So if I say any number, you should not laugh, I should also should not mislead you. Let us wait. Let us normalcy comes, then definitely we'll call for another. At the end of first quarter, I'll give you the volume this one, or definitely I'll call for another the conference call and let you know. Because today, if I give any number, then people with all the lockdown, how is it possible? The people may put the question. Let the normalcy returns, some sort of normalcy returns, then definitely I give you very good guidance, which it is 100% achievable.
Yeah, thanks, sir.
Thank you. The next question is from the line of Amit Magarkar from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity again. So my question was on ad spends and promotional spend. So you had curtailed it quite sharply in FY21. So now that the new capacities are getting commissioned, so will you look to do more spends on that front, or will it still remain curtailed?
Again, normalcy returns. If the normalcy returns, definitely I'll spend more, because I told you, definitely whatever efforts we are making, the efforts, mass contact program by way of masons meet, contractors meet, IHBs meet, and architect meet, and all these things. Today, such meets are not possible. We are doing to the webinar, but nothing like having personal meetings. So once normalcy comes, definitely our expenditure that this one will go up. And we are also put on hold all our wall paintings, hoardings, and all these things. Once normalcy comes, definitely we'll step up our efforts.
Sure. So you're talking more about normalcy from COVID rather than the lockdown-related impact on demand?
Because of COVID, only lockdown is coming now.
No, I mean to say, like in 4Q, we were seeing quite good demand, and even in April, you mentioned that.
That's the thing. Once the lockdown is lifted, definitely we will improve our maize program, that our team, technical teams program, and all our we also want to launch some TV advertisements, all these things. Everything we made it ready. The only thing, just I'm waiting for the market to open, because now even I spend a lot of money in TV advertisement, all these things with lockdown. Shops are not open. What is the use of my spending money?
Okay. Oh, sure. Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Sir, can you indicate what was your clinker purchase in 4Q last year and in the full year, if you have it handy?
Sir, clinker consumption details are available in the press release.
No, clinker purchase is off.
Purchase last year in this March quarter, if you have it handy.
Purchase details, I'll give offline. I don't have numbers right now. I have only consumption details.
No, I remember we purchased from a local buyer around 20,000 tons, 22,000 tons.
Last year, you mean? Okay.
Yeah, last quarter.
Okay. And, so in the press release, you have given the lead distance for cement. Can you share the lead distance for clinker as well?
The clinker, you can put the Google map and see Jaindivaram to that area. That's all. Whatever this one, we have only two grinding units. Jaindivaram to Kolaga, Jaindivaram to Jajpur.
Okay, sir. That's useful. Thank you so much.
Thank you. The next question is from the line of Ritesh from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So I just wanted to have a sense on the sort of incentives that we will avail from the states where we have expanded for our expansions. If that's a quantifiable number, please.
Sorry, can you repeat your question? Sorry, I'm not able to.
Sir, in my prior question, you did indicate on the IRR on the expansions into East, once we reach full utilization levels, it will match up to the ROCs that we are making currently. So just
ROC in Andhra Pradesh. I qualified ROC in Andhra Pradesh. Not in all markets. Not in Tamil Nadu, but ROC in Andhra Pradesh. I qualified.
Okay. That's helpful. And sir, over here when we qualify this equivalent to Andhra Pradesh, what sort of incentive assumptions are we baking in our numbers? Just trying to understand that.
Unfortunately, we don't have any incentive. So there is a difference between certain companies and our numbers. I don't have not even single piece incentive into my ROC or in profit or so or anything or other income.
Right. But for sir, our expansion in East, are we expecting anything? So I understand for internal benchmarking, we might not be having.
Orissa told you they are not giving.
Okay.
They will not be giving. West Bengal, we don't know because after GST, they have not revised the rules at all.
Okay. That's helpful, sir. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Krishna Kumar from Sri KK Investments. Please go ahead.
Good evening, sir. Congratulations, sir, on a great performance in tough times. On every parameter of metrics, I think been a huge improvement, and congrats on that. Sir, given that we have built a sizable capacity in cement, etc., and is there a plan to broaden the portfolio of the group to Ramco Cement? We have asbestos sheets in Ramco Industries, but using the distribution and a lot of logistics, could we also leverage the brand to launch other products? Any thoughts in the longer term, sir?
Sir, we have some.
Yeah, sorry, you can go.
No, you go ahead.
No, see, Ramco Industries, they have their own product range. They are in partition boards and housing. Sorry, you can answer to the questions.
So basically, in Ramco Industries, we have housing, partition boards, roofing sheets, and so on. That market segment is slightly different, and the density is not so high also, and the overlap is also much less. And in Ramco Cement itself, we are looking at other products.
Yeah, Ramco Cement, we are looking at least 2 or 3 different products during the current year. It's right. We are waiting for this lockdown to be lifted because we don't want to announce the new products and held up because of lockdown. We don't want that happen. So already we developed the product and we were told to release to the market maybe in the month of June. Once the lockdown is lifted, we will launch our new products.
Sure, sir. But the question was also more in terms of other product categories, sir. Like, for example, some companies get into, white cement and then paints. Like, a lot of companies are moving around on the product range. So, do we have plans on a longer term basis?
KK, white cement is not possible with KK because white cement requires a certain grade of limestone which is available only in Rajasthan, nowhere else.
Sure.
So the white cement is not possible. See, definitely the paint and all these things at this point of time, if you ask me, we have big expansion program on cement. See, once maybe after 2-3 years, once our certain target of expansion is complete, then we talk about other products. Because now, because in cement also when everybody is expanding, we should not be lag behind. So certain targets we also have in mind. So once we achieve certain size of our capability and all these things, then we'll think about other products.
Okay. Thank you, sir. Thank you very much. Wish you all the best, sir.
Thanks.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Milind Suresh Rajniwar from Centrum Broking. Please go ahead.
Thank you for the opportunity, sir. What would be our railroad mix and what would that be going forward?
The railroad mix, if we say in our southern market, it is 100% by road. When I say southern market, Tamil Nadu, Kerala, Andhra Pradesh and Karnataka, 100% we are making only the road dispatches. Only in the east, we have certain railroad dispatches. So in the grinding units, if you see maybe 70%, 70 to 80% is by road and 20 to 30% is by rail. But from Gandhipuram, we are marketing certain cement to northeast, also to east market, directly to the customers. That will constitute around 10 to 15% of the eastern market. That is also by rail. Otherwise, southern market 100% by road.
Effectively, sir, as we penetrate more into east, as you said, both the grinding units also have the railway siding with the mother unit, connected with the mother unit. So I'm just trying to understand prospectively that will be on a higher side.
Not necessarily. Railway siding not necessarily for outbound. See, for example, in Tamil Nadu, all the plants, Andhra Pradesh, all the plants I get railway siding, I don't use even for outbound. It is 100% used for inbound. You don't think that merely because we have railway siding, not necessarily I should use for outbound. See, that is more useful for the inbound materials also. Wherever, for example, from northeast I want to market, then by road is not possible. So that market I will take outbound. Otherwise, it is economical to use road rather than rail.
Okay.
And inbound, we try to use as much as possible from the ports. For example, if I want to take a flag from Orissa or from Vizag to Kolaghat, for inbound I will take materials. For outbound, I try to use as much as on the road dispatches because that reduces the cost significantly.
Okay. So the second question is the shift from Tamil Nadu to Kolaghat to Jayantipuram to Kolaghat would be now permanent, or is it like vacancy?
No, we will because we have that options open because once our higher capacity comes up, whether the number of rakes available will be a question mark. So definitely we'll keep both options of rail as well as ship.
But cost effective will be obviously the sea route, right?
Yeah, you're right. So Bengal I can move by ship, but Odisha will move by rail. It all depends upon what the cost of that point of time.
Okay. Sir, the third thing is sequentially our other expenditure has been on an higher side. Any specific thing that we should read for a sequential jump in the other expenditure?
Sorry?
For Q4FY21 over Q4FY21, our other expenditure has been a jump. So any specific thing that we should see apart from the volume growth, or it is?
No, nothing.
Nothing specific.
Nothing else gone up. In fact, my sales and promotion, all my fixed expenses come down. Vaidyanathan?
Packing materials cost is included in the other expenditure, which is related to the volume.
Okay. And lastly, sir, repayment of debt for the year 21 would be how much?
No, we did all this one, but net increase was around 75 crores. Then by FY21, net increase was around this one. FY22, there's no big repayment schedule.
Okay. Yeah, that is it from my side, sir. Thank you. Thanks a lot.
Thank you. The next question is from the line of Raghav Maheshwari from AMSEC. Please go ahead.
Congratulations for good set of results. Excellent work on the working capital. My question is little bit on the working capital side. So can you explain the reason or the initiative which you help into the release the major working capital from the trade receivables and the trade payables? And this is the recurring in the nature or permanent?
See, fortunately, we are able to receive a lot of big money from the electricity board, which was pending for a long time. We are looking forward to the grid. So I'm able to receive almost 140 crores. Sorry, during the last quarter, they reduced our receivable significantly. And since we built up a lot of petcoke and coal stock during the first quarter and second quarter. Yeah, Vaidyanathan, we can talk.
Sir, you can take a pause. I will explain. Working capital management. See, we had a huge inventory pile up, which we got it cleared up in this quarter, and we focused a lot on the receivables, and both for cement as well as this power business. So we managed to collect about 140 crores during the fourth quarter from the electricity board. So which was a good thing, which has helped to reduce our overall receivables. So we have been always focusing on this working capital for quite some time. So we'll be continue to monitor this working capital management. We'll try to improve upon.
Yeah, also all our things to be operated more than 100% capacity. Finished stock is almost zero. My clinker stock is almost zero, and my receivables is one of the least in the industry. So all these things help us in reducing working capital.
Got it, sir. Thank you, and all the best.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Sir, I have just two housekeeping questions. One, for fiscal 21, can you give a sense of your volume for East? And also, how your profitability was in East versus South? Just some color is fine. Hello.
Hello.
Yes.
Sorry, we can't share that information.
Okay, cool.
Thank you. The next question is from the line of Amit Srivastava from BNK Securities. Please go ahead.
Yeah, hi. Congratulations, sir, for a great set of numbers in a challenging time. Sir, our current CapEx plan is towards the Andhra Pradesh and towards the eastern market, servicing that market. How are we placed in terms of the Tamil Nadu and Kerala market? Because we are putting a lot of efforts in terms of branding as well as towards the maize to gain the market share and everything. And we are at 100% utilization. So tomorrow if the demand comes in, so how placed in that side of the business, sir?
Srivastava, first of all, thank you very much for your report. I happened to go through your report. It was very, very nicely prepared. You are the only person who expressly explained what are the facilities created by Ramco Cement, why the capital expenditure is little high. Normally, the people put me a lot of questions on the capital expenditure is always on the right side. Your report gets clearly brought out why Ramco capital expenditure is higher than others and what are the benefits we are going to get in long term. So those aspects you have brought out in your report. Thank you very much. Many people forwarded the report to me and appreciated that. So I thank you very much for your nice report. Number one. Number two, merely because we are setting up grinding units in East, does not mean we are going to neglect our South market. In fact, that brings lot of capacity being free to our southern market. For example, previously I used 100% of my grinding capacity of Jayantipuram. Sorry, most of the grinding capacity in Jayantipuram to East market. Now that the grinding capacity has come up in the East, now the Jayantipuram capacity is now available to South.
Okay.
So to the extent that my South market cement available in the South market is more. Does not mean I'm going to I'm going to ignore on my South market share is going to come down. In fact, it's freed up. My whatever the capacity I'm putting up the East, because always our grinding capacity is also more than our clinker what is possible cement production. Always we put up 2-3 million tons more. To that extent, always South market cement available will be always available to 100% of its requirement.
Okay. Sir, on a second question, in terms of Odisha market, sir, we were getting a very good response in our channel that non-trade is very preferred in terms of the Ramco Cement as a brand for the non-trade also. So tomorrow, if our brand acceptance is increasing in Odisha market and non-trade is also very much in demand, so how are we going to position? We are going to focus on a trade only, or a non-trade will also be focused towards that segment also?
No, we focus on both. In fact, in markets like East, in fact, non-trade stretches is more profit than trade. Right. Because there, as you rightly told, we are getting good premium over any other brand. Right. And there are certain projects where Ramco is the only specific brand. Okay, to that extent, brand is the quality of the cement is well accepted, because not only cement we supply, also we supply them good services like what is the good raw design mix and how to economize the design mix. All the services also given by our team. To that extent, that projects like our team's efforts, so that they can also reduce the cost. So okay, to that extent, our brand is well accepted. So there, equally we are giving importance to non-trade also.
Okay. Great, sir. Thank you very much.
But at the same time, our focus is always on trade.
Okay.
Because non-trade depends upon project, may stop, then they will not come. Whereas the trade, there is continuity of supplies. So our focus is to improve lot in trade. At the same time, we don't ignore non-trade opportunities also.
So have we launched all the products, sir, in that market, in Odisha market?
No, sir. Not one or two products are paid. One or two products we are launching.
Okay. Okay, sir. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to Mr. Krupal Maniar for closing comments.
Thank you, Rutuja. On behalf of ICICI Securities, we would like to thank the management of Ramco Cement for the call, and thanks all the participants for joining the call. Thank you very much. Rutuja, you may now conclude the call.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.